Morning, ladies and gentlemen, and thank you for standing by. Welcome to today's Thales H1 2025 results conference call. The presentation will be held by Patrice Caine, Thales Chairman and CEO, and Pascal Bouchiat, Thales CFO. It will be followed by a question and answer session, at which time, if you wish to ask a question, you will need to press *11 on your telephone and wait for your name to be announced. I must advise you that this conference is being recorded. I would now like to hand the conference over to Ms. Alexandre Boucheron, VP, Head of Investor Relations. Please go ahead, madam.
Good morning. Welcome and thank you for joining us for the presentation of Thales H1 2025 results. I am Alexandre Boucheron, Thales Head of Investor Relations. With me today are Patrice Caine, Chairman and CEO, and Pascal Bouchiat, CFO. The presentation will be followed by a Q&A session. As usual, this presentation is audio webcasted live on our website at thalesgroup.com, where the slides and press releases are also available for download. Finally, a replay will be available soon after the end of the event. With that, I would like to turn over the call to Patrice Caine.
Good morning, everyone, and welcome to Thales 2025 half-year results. Starting with a few highlights of the group's performance so far this year. To start, Thales has achieved high single-digit sales growth in the first half of the year, mainly driven by avionics and defense. Indeed, focusing on defense, the supportive context has offered Thales increasing opportunities globally, with a new order of 26 Rafale fighter jets for Indian Navy, which was booked in Q2 2025, or with a £1.16 billion contract with the UK Ministry of Defence for the supply of 5,000 LMM missiles booked in July 2025. Growing opportunities that we start to see with the ReArm Europe plan to enhance defense capabilities in Europe, and France planning to exceed the military programming law by progressively increasing total defense spending from €50 billion in 2025 to €64 billion in 2027. This amount of €64 billion was initially supposed to be reached in 2029, meaning that we expect a real acceleration in France as well. So this context, along with a constant focus on operational efficiency, has led to a strong increase in our adjusted EBIT margin, which I will detail in the next slide. So now moving to our H1 2025 financial performance on slide number 3. Commercial momentum was solid for order intake over the semester, with €10.4 billion worth of orders. This reflects the high level of demand for Thales products and solutions in most of our businesses. The book-to-bill ratio stands once again above 1 in H1 2025. Sales progression was robust in this first half of the year, up 8.1% in total and organic changes to €10.3 billion. Adjusted EBIT reached €1.2 billion, recording a solid 12.7% organic growth. Margin was up sharply and stood at 12.2%. Adjusted net income reached €877 million in H1 2025, or €937 million if we exclude the temporary additional corporate tax paid this semester in France. This compares to €866 million last year. In terms of cash generation, H1 2025 was particularly strong, with a free operational cash flow of €499 million. Lastly, net debt position as at end of June 2025 increased by 383 million euros compared to December 2024 to 3.4 billion euros as a result of the usual seasonal effects, including dividend payments. And if we compare to end of June 2024, the net debt has been reduced by more than 1 billion euros. I now hand over to Pascal, who will review our financial performance in greater detail.
Thank you, Patrice, and good morning, everyone. I'm on slide 4, starting with order intake. As Patrice mentioned, momentum was solid in H1 2025 for order intake, which stood at 10.4 billion euros. One large contract was signed this semester with a unit value above 1 billion euros, namely the order of 26 Rafale by the Indian Navy. This compares to 3 contracts in H1 2024 with unit value above 500 million euros, leading to a very high comparison basis. Taking a step back and comparing this first half to H1 2023 order intake, we observe a robust increase of 21% in H1 2025 order intake, underscoring the group's solid growth trajectory. 10 large orders were booked in H1 2025, 6 in defense, in all domains, illustrating the continued strong momentum and the relevance of our portfolio of products. 4 in aerospace, of which 3 in space and 1 in avionics, all booked in Q1 2025. Importantly, orders below 10 million euros showed robust progress of 5%. Now moving on to sales on slide 5. First, a word on scope and currency impact. H1 2025 saw a positive scope impact of 87 million euros, mostly concentrated in Q1 and mainly resulting from the Cobham Aerospace Communication acquisition. Cobham is integrated in the organic figures since April 2025. April 2025. Currency impact was negative at minus 73 million euros due to the strengthening of euro against US dollar and Australian dollars. Excluding those impacts, sales were up 8.1% on an organic basis in H1 2025. This solid performance clearly demonstrates Thales' continued strong growth momentum. This growth notably reflects the good momentum in aerospace, mostly driven by avionics. In addition, defense delivers again double-digit growth in the supporting context Patrice already mentioned. Cyber and digital was slightly down in H1. A progressive ramp-up is expected in H2, and I will come back to this in a minute. Finally, sales organic growth was well balanced between mature and emerging markets. Europe posted a solid 8.9% growth in H1 2025, while emerging markets delivered double-digit growth. Turning now to slide 6 and having a look at the drivers of adjusted EBIT year-on-year increase. Looking first at the mechanical impacts, scope effect was positive and amounted to 23 million euros, primarily linked to Cobham Aerocom acquisition. Currency impact was negative at minus 9 million euros, while pension costs impact was marginal. As you can see, the strong progression of our gross margin was the most significant driver of adjusted EBIT growth. It was up 160 million euros, driven notably by the sales volume increase on defense. While costs linked to marketing and sales are stable year-on-year, R&D expenses were up in H1 2025 and stood slightly above 6% of sales, reflecting sustained R&D investment. G&A expenses were contained as well, growing organically at less than half the pace of revenue. Restructuring costs were higher in H1 2025 versus H1 2024, mostly driven by the costs linked to the adaptation plan in space. Finally, contribution from equity affiliates increased by 28 million euros. Most of our JV progressing well, with also a few positive one-offs. On the other side, contribution from Naval Group was hampered by the temporary additional corporate tax in France. Moving now to performance by segment and starting with aerospace. I'm now on slide 7. Orders in the segment came at 2.7 billion euros, broadly stable year-on-year. Avionics enjoyed a solid underlying demand across most segments, and notably in the military domain. Order intake in space was slightly down, although 3 large orders were signed in H1 2025, of which 2 in telco for Norway and Japan, and 1 in exploration. Sales amounted to 2.8 billion euros, leading to an organic growth of 5.8% year-on-year. This reflects, on the one hand, sustained growth in avionics, with a strong performance notably in aftermarket, supported by robust air traffic momentum and in military activities. On the other hand, space sales are still impacted by the low demand experience over the last 2 years in the telco business. Now commenting adjusted EBIT, with a sharp increase of 2.7 points in margin, which stood at 9.1% in H1 2025. This strong progression was driven by the solid double-digit margin in avionics and also an improvement in space margin, on track to deliver a positive adjusted EBIT before restructuring costs in full year 2025. Moving on now to defense on slide 8. So in defense, order intake amounted to 5.8 billion euros in H1 2025, reflecting strong and continued commercial momentum, although year-on-year comparison is impacted by a quite tough comparison basis. 6 large contracts were booked in H1 versus 9 in H1 2024, which also saw the booking of 3 contracts with unit value above 500 million euros. It's worth noting that small orders were particularly supported this semester. The good news is that additional large contracts are expected to be booked in H2, notably in air defense, with contracts with the UK and German governments. As a reminder, book-to-bill ratio is expected above 1 this year in defense. Sales amounted to 5.6 billion euros, recording a sharp organic growth of 12.7%, ahead of full-year expectations. This was driven by continued double-digit growth in Q2 after a very strong Q1, with solid momentum in most of the activities. The performance also benefited from continuous production ramp-up. Margin was broadly stable, around 13% as expected, and in line with annual expectations. Moving now to cyber and digital on slide 9. At 1.9 billion euros, sales of the overall cyber and digital segments were down -1.9% organically. Commenting cyber first, whose sales were down organically in H1 2025. Cyber product growth, which represents more than 80% of total cyber business, was hampered by the short-term disturbances linked to the merger of Thales and Imperva sales forces. This merger has been completed at the end of Q2 as expected. During this process, marking the final step of the integration of Imperva, 70% of sales reps were allocated either a new customer portfolio or a new product portfolio to sell. We now expect a progressive ramp-up in H2 for this activity. In cyber services, low market dynamic, all back growth in H1. As you know, our priority for this activity is on executing our strategy of premiumizations to refocus on segments offering more profitable growth. While this process implies rationalizing and standardizing some operations, it can temporarily act as a drag on growth. Moving to digital identity, we face that recorded growth in Q2 after a slow Q1. Over the whole semester, organic growth is slightly down. H1 2025 was slow in identity and biometrics as the activity is normalizing to a more usual run rate after the COVID catch-up effect that occurred until 2024 in the travel documents activity. In secure connectivity solutions and payment services, the performance of digital solutions was very solid. While digital banking solutions were indeed vigorous in H1 2025, digital solutions in secure connectivity also drove solid profitable growth. The overall adjusted EBIT margin of the segment has been holding well this semester, protected by continued disciplined pricing policy. While overall margin was stable in cyber, it's worth noting that the premiumization strategy is starting to bear fruit in cyber services with an increase in margin year-on-year. Margin was slightly down, however, in cyber products due to temporary low top-line evolutions. Margin was also slightly up in digital identity, but also benefiting from a few positive one-offs. Now, looking at the H1 2025 adjusted P&L, I'm now on slide 10. The cost of financial debts and other financial returns was up compared to last year. The comparison is impacted by the non-recurrence of positive one-off recorded last year, namely dividend payments from non-consolidated affiliates and also a foreign exchange gain. The finance costs on pensions and other employee benefits were broadly stable. Looking at taxes, you can see the effective tax rate was significantly higher this semester and stood at 26.7%. This is due to this temporary additional corporate tax in France, front-loaded in H1 2025 at 60 million euros, out of the total 80 million impact expected this year have been recorded in H1. Excluding this impact, the effective tax rate was broadly stable at 21%. Minorities are down year-on-year, mainly linked to the reduced net loss incurred by Thales and Space. Overall, adjusted net income group share stood at 877 million euros in H1 2025, or 937 million euros excluding the tax one-off. This compares to 866 million euros last year, so leading to a 8% growth. Moving now on slide 11 to free operating cash flow. So the free operating cash flow was particularly strong in H1 2025 and stood at 499 million euros versus minus 85 million euros last year. This excellent performance was driven mainly by the significant improvement in change in working capital. This reflects the continued satisfactory payments profile from customers, including down payments and the result from ongoing action plans to optimize stocks after the increases of the past years. This H1 2025 performance makes us quite confident to achieve our guidance of 95 to 100% adjusted net income to free operating cash flow conversion ratio for 2025. Concluding the financial performance, moving on slide 12, with a review at the net debt evolution. So we see net debt amounted to 3.4 billion euros at June 2025 versus 3 billion euros end of December 2024. The main drivers of this seasonal increase are the payment of our dividends, resulting in a cash out of 586 million euros, and new leases for an amount of 118 million euros. The disposal impact stood at minus 64 million euros. This is due to the final price adjustments related to the sale of Hitachi Rail of the transport activity. These impacts were, however, partly compensated by the strong free operating cash flow I've just discussed. So thank you for your attention. I now turn over the call to Patrice to review our strategic priorities and guidance.
Thank you, Pascal. So now turning to our strategy and outlook. So I'm on slide 14. Here are the 4 strategic priorities for 2025 we shared with you during our 2024 full year results. As you will see, we've made a significant progress following these priorities in the first half of the year. So first, ramping up our capacity, which includes production capacity, but also ensuring we have the right talent to seize market opportunities. Second, restoring space profitability, a key priority for the group this year. Third, maintaining our innovation and R&D leadership to increase differentiation. And last, fourth, delivering strong value creation from our recent acquisitions, namely Imperva and Cobham, which have both undergone successful integrations. So moving to slide 15, and first, the capacity ramp-up. So due to the current supportive context and Thales' strong position and value offering, many of our products are in high demand. And to respond to this trend and serve our customers, we have continued our internal and external efforts to accelerate production. Internally, by investing in some of our production sites and recruiting the right talents. Externally, by supporting our supply chain and mitigating potential bottlenecks. Just to give you a few examples of these capacity extensions, Thales launched an unprecedented investment plan of around 350 million euros for its Cholet site in France, which employs 2,600 people, hosts R&D, production, and service activities, in radio communications, cybersecurity, electronic warfare, and satellite communications. This project includes, among other developments, new industrial lines for equipment and systems to provide significant increases in production rates expected in the current context. And another capacity expansions have been implemented all around Europe, namely in Hengelo, in the Netherlands, and Gdańsk in Poland. But as I just mentioned, ramping up our capacity also means ensuring we have the right talent in place to seize market opportunities. So we have continued making Thales a very attractive employer brand, and our strong brand awareness has once again been recognized. The Universum Research Institute ranked Thales as the #1 most attractive employer among engineering students in France in 2025. If I move to space now, well, as you all know, we have been implementing since March 2024 the transformation plan of Thales Alenia Space Telecoms business line in order to, number one, optimize its structure, number two, maintain its leadership position, number three, restore its profitability. This plan mainly consists in the redeployment of 1,300 positions across the group with no forced departure. As of H1 2025, we have 75% of positions already redeployed. Moreover, Thales has had a certain number of recent commercial wins, and just to name a few, contracts to build telecom satellites in Norway and in Japan, a contract with Hispasat to start the development of the world's first quantum key distribution system capacity from geostationary orbit, and a contract with the European Space Agency to develop the space segments of the navigation system orbiting around the moon. And these promising business and business growth opportunities show our transformation plan is going in the right direction. Hence, we are confident in Thales Alenia Space perspectives for profitability recovery. Third priority regarding our innovation leadership. Maintaining strong R&D capabilities is indeed key to bringing pioneering and differentiating products to our customers. In the end, this is why our customers prefer us versus the competition. A few illustrations of what we have done so far this year in this area. Expanding our Cortex AI accelerator worldwide with new AI industrialization capabilities in the UK and Singapore, targeting 800 AI experts and around 100 PhD students globally at the end of 2025. For those of you who visited Thales stand at Paris Air Show, I imagine you have seen the number of products, over 100, with Thales AI inside. Another example is our future potential partnership with Radial and Foxconn to create an industrial capacity to develop what we call system in package, SIP technologies in France. For the more curious among you, this technology enables the integration of multiple electronic components into a single compact module, thanks to an increase in the density of electronic components while reducing their size. In one word, we are developing the electronic technology and components of tomorrow. It's a definite step towards more strategic autonomy. This partnership with Foxconn and Radial will indeed meet the growing needs of the aerospace, automotive, telco, and defense sectors. Fourth priority, Thales is, of course, strongly committed to delivering strong value creation from recent acquisitions. Imperva and Cobham Aircoms are already providing strong operational performance and synergies across the group. For example, Thales has launched a new solution combining Thales and Imperva's best technologies named File Activity Monitoring, or FAM. You all have in your companies unstructured data across servers, cloud services, and file shares, that is to say everywhere. It would take an endless time to look at each file, define the level of classification, and secure it. Thanks to AI capability, FAM, File Activity Monitoring, is doing everything for you automatically. This is just one example of the new state-of-the-art solutions that we are launching. Moreover, the activities stemming from the acquisition of Cobham Aircoms are showing very strong performance thanks to the development of synergetic products such as the safety satellite communication system Thales will provide to equip the A400M military transport aircraft. Moving to the last slide. So all these priorities will bring Thales to continue pursuing ambitious financial targets for 2025. A book-to-bill ratio above 1, organic growth of 6 to 7%, or 28.8 to 22 billion euros in sales, and a 12.2 to 12.4% adjusted EBIT margin. Many thanks again for your attention, and we will now be pleased to take your questions.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. As a reminder, if you wish to ask a question, please press star 11 on your telephone and wait for your name to be announced. Our first question today is from the line of Benjamin Heelan, Bank of America. Please go ahead.
Yes, morning, everyone. Thank you for taking the question. First question, Patrice or Pascal, was on cyber. Obviously, a very strong decline in Q2, which on the face of it, I think is kind of marginally worse than certainly what I was expecting. And you've highlighted again sales integration. Can you just talk a little bit about what is actually going on? Like, why is the integration of Imperva's sales team being so disruptive to the business? And you have some comments in the presentation about expecting a progressive ramp up in the second half of the year. Can you just talk a little bit about what we should read into that? Is that sequential improvement versus Q2? Should we see a return to year-on-year organic growth in that business? So any color around that would be super helpful. Second question on space, and can we get an update on the discussions between yourselves, Airbus, and Leonardo? Any timelines that you can provide there would be helpful. And then finally on avionics, can you break down a little bit what you're seeing in terms of aftermarket growth versus original equipment, and any color on the IFE business that you have as well would be super helpful. Thank you both.
Okay, I start on cyber, perhaps, and space as well, but of course Pascal will complement. Well, cyber. We said since the very beginning that this first semester will be not a normal semester, if I may say. Clearly, it's an important and mandatory, by the way, operation to merge the two sales teams. We did so, if you remember well, Ben, between Vormetric and Safnet a while ago. Safnet belonging to Gemalto, Vormetric belonging to Thales. So when we acquired Gemalto, we had this merger within the merger between Vormetric and Safnet. So honestly, I would like to reassure you, we know how to do it. We knew it would cause some inefficiency. It gathers, or it concerns 1,000 people. So it's a vast sales team, and approximately 70% of these people have changed either the customers they were supposed to address before, or the products they were supposed to push before, plus the fact that we have aligned incentive scheme, which is also something which is both important and sensitive in this type of business model. So it's absolutely, I would say, expected and normal that some inefficiencies occurred in H1. Now, of course, the fact that it was a bit higher than your own expectation, it's pretty difficult to model it very precisely. Now we need to take a step back, be a little bit patient. We are, I would say, very confident that it will progressively come back to a fully operational and efficient situation soon. And normally H2, I'm sure we'll have question in Q3, but H2, end of H2, end of this year, we'll be able to measure, to monitor this return to full efficiency in this domain. But the quality of the asset and the quality of Imperva is a high quality company, and the products are of high quality. That should, I would say, help us to keep a cool head looking at just Q1 or Q2 figures in this domain, though they may seem a bit disappointing. Now space, not much to say, if I may say. Discussions are ongoing. And as I've said already in the past, we will, I would say something if and when we have something to say. So work in progress. Not sure it will get to something which would be positive or something which would be which will be announced to the three of us. So too soon to say, but working on it. More color on avionics, Pascal?
Yes. Good morning, Ben. So avionics, so overall, I mean, very happy with the level of performance, in particular in terms of growth in H1. In terms of, I mean, the key subsegments where we enjoy most of the growth in H1, one is the aftermarket, which has been pretty strong in H1. Good level of demand continuing throughout H1. First point. Second, also, I mean, Cobham Aerocom, in terms of level of growth. You mentioned about OEM. It's in particular at Cobham Aerocom where we enjoy the largest level of growth. For the rest of OEM, it follows, I mean, in particular, the production output of our key customers. Now, you mentioned in particular IFE. So IFE overall, no concern at all in terms of growth, underlying growth. At this point, I mean, the concern is more about our clients being able to get their aircraft or their seats so that we can deliver our own products. That's a point that we mentioned in Q4 last year, and it's true that things seems to be a bit better, but we are still not there. And this is today, I mean, some kind of limiting factor overall in terms of growth for IFE. Now, in terms of underlying level of demand, I mean, IFE is back to what it should be in terms of level of demand.
Very clear. Thank you.
Thank you. Next question is from the line of Olivier Brochet from Rothschild. Please go ahead.
Yes, good morning, Patrice, Pascal. I have a few questions, if I may. Starting first with cyber and digital. Could you just give us a sense of how significant in terms of revenue is the banking solution business that you mentioned in the presentation? And you also mentioned there positive one-offs. What were they, and of what scale were they, please? Secondly, on Imperva, to continue on Ben's question, have you seen some leakage on R&D and key people leaving, or on the contrary, has it been quite satisfactory on that front? And third, on ExoMars, if the US get out of ExoMars, what are the consequences for Thales, please?
Okay. So, good morning, Olivier. So we'll start maybe on cyber. So, in terms of digital, I mean, there is at this point, in terms of size of business, still quite a difference between the level of transitioning on the mobile communication system from the classic RSIM to the embedded SIM. I mean, we already commented these transitions, which is going pretty nicely. And very soon we'll have most of mobile communications system business driven by the digital, i.e. the embedded SIM business. On banking, and that was your question, of course, I mean, the move will take much longer, which means that even though the growth of our digital banking solutions is pretty strong, it's really a double-digit type of growth, the underlying level at this point is still a small size business. We are talking about a business which overall represents something like 50 million euros of annual revenue, but growing fastly and paving the way for this progressive transition for the banking business. But once again, that will take time. And yes, I mentioned several one-off, mainly two one-off on cyber and digital in H1. One was a pretty strong level of demand on SIM in a specific telco operator in Asia. So that's the first point. And the second is more on JV with Thales, which in 2024 was pretty low in terms of contributions, having a specific one-off positive that came in H1 2025. Overall, I mean, the impact in terms of margin for the cyber and digital business is not that large, but I mentioned these points. Imperva?
Imperva, of course, we monitor, I would say, attrition at Imperva, or globally speaking, at our CSP business. Honestly, we have not observed anything that would be, I would say, worrying or above benchmark. In fact, it's below benchmark, even in the US. And you know that in the US also, some big digital or big tech companies have, I would say, either stop hiring or lay off people. So the tension on the market is, I would say, probably less stringent than it was before. So nothing to be worried about on this. Of course, good and important question, Olivier, about key people, not only in R&D but also in the sales team. We have also some key people in the sales area that are important for the business. Moving to space, in fact, more than ExoMars, we were, I would say, looking very precisely at the discussions and developments around Artemis, because you know we have a big stake in this Back to the Moon initiative. We have been reassured by the recent, I would say, vote of the big beautiful bill in the US, which has in particular confirmed the high level of credit of funding allocated to NASA on this particular project. So I would say, so far, I would say we are reassured. There is no particular concern. Now, let's also acknowledge that the situation in the US is always difficult to predict. So as we speak. No concern, but let's keep, how we say, let's keep cautious. Exactly, yes. Thank you, Olivier.
Thank you very much, both of you.
Thank you. Next question is from the line of Ross Law, Morgan Stanley. Please go ahead.
Hi, morning, everyone. Thanks very much for taking my questions. So the first is just again on cyber. Can you maybe be a bit more specific on your second half expectations? Should we be expecting year-over-year growth? Secondly, on space, you've called out the margin as being significantly improved. Can you maybe quantify that margin for the first half and also what you're expecting for the full year? And then thirdly and lastly, you call out investing in expanding industrial capacities. Are you doing this on the assumption that defense spending in France goes above the current LPM trajectory, or are you continuing to assume for the time being that the LPM is maintained in its current form? Thanks.
Okay, good morning, Ross. Maybe I will start with the first one, Patrice, on cyber and space. So yes, Ross, we expect cyber to get back to positive growth in H2. This one's probably a bit too early to quantify, but yes, we expect progressively to get back year on year in Q3 and Q4 to be positive. This is how we see the most likely scenario for this cyber business, and in particular on the cyber product sub-segment, which is the one where we want to resume growth. Maybe it deserves a bit of additional comment. As you know, in our cyber business, we've got which represents the bulk for business, which is the cyber product business. Overall level of revenue between 1.3-1.4 billion euros, and this is clearly where we want to resume growth as quickly as possible, and it should be the case as early as Q3. The second sub-segment, which is by far the lowest, which is the cyber services. You know, this business, its key purpose is really, to drive then sales in our cyber product business. This is the famous doctor as opposed to the producer of medicine. So cyber services is really designed, is meant to foster the sales of products. So this business is a much smaller one. It's a 250 million euro annual sales, which was significantly down, resulting from two factors. One was the softness in terms of demand, in particular in Australia, and the second was really our decision to refocus this business on the most attractive segments, market segments, and this is what we keep doing. So on this cyber service sub-segment, the strategy is not that much growth in the short term. It's more, increasing profitability. On the cyber product businesses, this is where we should see growth resuming in Q3. Space, first you asked me to quantify a bit more, the progressions of EBIT. So what I can confirm is what we expect for the full year 2025. You probably have in mind that back in 2024, this space business overall in terms of level of EBIT, we mentioned it was close to minus 70 million euros of EBIT, and we said that in 2025 it should be break-even before restructuring charges, and this is what we expect overall. Restructuring charge for space in 2025, it should be 25 million euros, which means that excluding those restructuring charge, this business should be break-even in 2025. And the run rate in H1 2025, overall in terms of level of EBIT, really, I mean, underpins or support, I mean, this overall level of profitability for the full year.
Okay, if I take the third one, and good morning, Ross. Indeed, it's a good question. This, I would say, additional funding that has been announced by the French president is good news, of course, in terms of business momentum, which will come on top of the already growing multi-year programming law. Now, in terms of CapEx, in terms of investment, and in the case of France, because the question is on France, but the reasoning would apply to any other countries of Thales. Of course, we take a global appraisal. We look at all the markets we serve from France, French market, but also all the export markets, number one. And it's mainly based on our, I would say, backlog and or some immediate expected contracts, but clearly something which is de facto firm. Hence the fact that Limour, when we have increased the production rate of our radars, time 4 in a few years, same for our ammunition business in France, times 4 as well, was really based on, I would say, backlog plus immediate contracts. So coming back to your question related to the recent announcement of the French president, honestly, it's a bit too soon to say that it will trigger additional CapEx. Now, again, if it materializes next year, of course, we will always assess continuously our situation and see if it deserves, I would say, additional industrial capacity or what we have already in hand is sufficient to serve this additional requirement or this additional need. So to make it short, a bit too soon to say if this will trigger new CapEx, but if yes, we will adjust as we did in the past.
Very clear. Thank you both.
Thank you. Next question is from Chloé Lemarié from Jefferies. Please go ahead.
Yes, good morning, Patrice, Pascal, and Alexandra. Thank you for taking my question. I'd start with the guidance update. If you could share with us the moving parts from the initial 5 to 6% organic growth. I'd assume it's fair to expect maybe slower cyber versus a mid-single digit, but maybe higher defense. So if you could just talk around that. The second is actually on restructuring. Could you just remind us what you expect in total restructuring costs for this year? And last point, just on the cyber performance, just wanted to see if you had seen any softness in the markets that kind of let's say amplified the impact of the sales integration, or if it's simply the effect of the sales integration that's affecting the group at this point. Thank you.
Okay. Good morning, Chloé. So, I mean, you answer your first question on the moving parts. So yes, I mean, the upgrade of the guidance for organic growth of revenue, moving from 5 to 6 to 6 to 7. Yes, and the positive is, of course, I mean, defense. And overall, it's true that today we see organic growth in defense in terms of revenue for 2025. That should be probably high single digits. This is how we see today. I mean, the most likely scenario. Now, it's also true that on the side, if I take cyber and digital, probably a flat to low single digit is probably more what we have in mind considering, I mean, H1. But overall, and it's true that on this call we have not discussed a lot about defense growth, but it's true to say that we are quite positive on this business. And overall, and considering the size of our defense business, overall, this allowed us to upgrade our revenue guidance. So, second question was about expectations in terms of level of restructuring expenses for 2025. Overall, my view is that it should be probably around 120 million euros. Our H1 restructuring expenses was 55. So let's consider that it should be twice this amount for the full year, which, if I remember well, is probably what we expense in 2024, with still in 2025, still a level of restructuring charges for space that will be still material. I mentioned 25 million euros. So this is what I can share with you in terms of restructuring charges for 2025. Patrick?
Yes. Good morning, Chloe, and thank you for your question. Indeed, it's a question we've asked to ourselves, of course. Now, what I can say, well, number one, we have, I would say, market figures only for Q1. And these figures, and we need to go into, I would say, quite a detailed analysis because, this cyber market is highly fragmented in terms of threats and therefore in terms of products. So it needs a deep dive on what is really, I would say, pertinent for us, namely a data security segment, application security segment, or the IAM segment, Identity and Access Management segment. In these different segments where we operate, in fact, Q1 figures, they do not show any kind of softness. So it's reassuring, considering your good question. Now, for Q2, we are consolidating the figures, but it's a bit to say. Therefore, more qualitatively, if I may, so it's not based on figures, but more qualitatively, all the feedback that we have from our teams says that the market is there. I mean, there is nothing has changed in the market. And if we take a further step back, if we look at the number of cyber attacks worldwide, and we do, I would say, publish yearly reports on the cyber, I would say, the level of cyber threats worldwide in our domains, it shows that this, I would say, the situation is worse and worse, if I may say. So needing more and more cyber protection, in particular in our domains. So nothing to be, I would say, worried about. And again, the third driver is really this reorganization that created these inefficiencies I've already mentioned.
Very clear. Thank you.
Thank you. Next question is from Alessandro Pozzi from Mediobanca. Please go ahead.
Hi, everyone, and thank you for taking my questions. I have two. The first one is on the French defense budget. As you pointed out in your opening remarks, there is an acceleration in defense spending in France. I was wondering if you have a sense of what could be your capture rate there and how well placed are with your products to capture basically the increased spending. And the second question is on the free cash flow. I think the improvement was in part driven by working capital. Can you tell us maybe what we should assume for the second half of the year for the working capital? Thank you.
Well, I can start on the first one. Good morning, Alessandro, and thanks for your question. So yes, this announcement is clearly a positive for us and for the defense industry as a whole. The figures are not negligible, 3.5 billion euros in addition in 2026 and 3 billion euros in addition to what was already expected in 2020 and 2027. Now it's a bit too soon to say how much will it represent for Thales. So the good rule of thumb is the fact that we will have our fair share, if I may say. So if we take in average what we as Thales capture, globally speaking, of the defense budget, there is no reason why it should not be at least the same. So it's a bit of a qualitative answer, but for the moment, it's the best I can say, on top of the fact that it is a positive. It is a positive, of course. Now, always keep in mind that we should see it as of next year in terms of order intake, but in terms of sales, it will take a bit more time, of course, as usual. So, does it change our sales perspective for 2026, 2027? Probably not, certainly not. But it's a nice additional opportunity in terms of order intake, of course, for 2026 and onwards. Free cash flow, Pascal?
Yes. Good morning, Alessandro, and thanks a lot for your questions on cash flow, because it seems to be that strong performance on free cash flow in H1 was not noticed. And
not
so
yet.
far,
Not yet.
So thank you very much for that. So overall, yes, as you know, I mean, our working capital is seasonal at Thales, and like you also in the sector, with growth in working capital in H1 and the drop in H2. That this is the reason why our cash flow generation is much higher on H2 than it is in H1. Now, it's true that the way we started 2025 was very strong and clearly above our own expectations. And as I mentioned in the press, resulting from two factors. One, overall, I mean, a pretty strong payments profile from our customers, both on current project execution, but also on done payments. And second was our ongoing actions to optimize our level of stocks. So when you put all of that and if you project yourself to H2, I'm quite positive, and I think that in my press I mentioned that we are quite confident to achieve our guidance in terms of free operating cash flow for the full year. Of course, it will depend upon maybe some last-minute payments or cut-off in terms of payments from Q4 to Q1 2026. But overall, as you understand from my tone, we are quite positive in terms of cash flow generations again in 2025, confirming, I mean, this pretty strong cash flow generations at Thales. So our ability to convert, I mean, all our net income into free operating cash flow.
Understood. Just a follow-up on the cash flow. In terms of CapEx, what should we assume in terms of year-on-year movement in 25 versus 24?
So we should see our CapEx moving up in 2025. In 2024, overall level of CapEx, I think it was something like 620 million euros. We should be probably around 700 in 2025, showing that we are accelerating, and in particular, as we see, I mean, opportunities in terms of business, which needs the continuous ramp-up that we have already commented. So clearly, we'll keep probably increasing overall our capital expenditure. Now, it doesn't change our view in terms of overall our ability to convert net income to free operating cash flow, which means that it's my view that we can do both. On one side, I mean, keeping growing our capital expenditure and paving the way for future organic growth expansions, together with maintaining a pretty strong level of conversions ratio, as by the way, we committed at our Capital Market Day in November last year.
Understood. Thank you very much.
Thank you. Next question is from the line of Hervé Drouet from CIC Market Solutions. Please go ahead.
Yes, good morning. Thank you for taking my question. The first one, I'm sorry, is back to cyber. And if we looked at the margins and the way the EBIT margin has evolved compared with first half, it's been, in fact, quite stable despite the pressure on sales. I was wondering, I mean, how do you explain that? Is it because you have taken less integration cost in H1 this year versus last year, or is it the product mix which has slightly changed, as you explained, potentially in the cyber services? And I was wondering if you can give us as well maybe a split between what is recurring, maybe coming from a SaaS type of a product versus which is more, one-off sales you do, on the go. So that's on the cyber. And the second question is more on the defense side, and especially on the order intake, which has a pickup in Q2 versus Q1, slightly above 1. But if we looked at some countries, especially UK and France, I mean, UK, I think it's minus 25% versus 24, and France 10%. I understand, I mean, the budget is gradually increasing. I was wondering what explains maybe this softness for those two countries. I understand you are expecting some pickup in second half, but do you believe we are going to have still be negative at the end of the year on those two countries on order intake, or we can go to par versus last year? Thank you.
Mm-hmm. Okay, good morning, Hervé. Maybe I will start on commenting a bit more on cyber in terms of margin. And this is probably where I need also to come back on the two sub-segments that I've already commented, cyber product on one side, cyber services on the other side, because in terms of margin, it is quite different. So cyber product is where, I mean, we get most of the margin, and pretty strong level of margin for this segment. And here, I mean, our strategy is quite simple: is resuming growth as quickly as possible, while, I mean, preserving the level of margins that are more in the high teens, or low 20s, at this point, more high teens level of EBIT margin for this cyber product business. On the other side, I mean, the small size cyber services is today a level is a business where at this point the level of profitability is not what we expect. At this point, it's slightly negative. It was negative in 2024, in particular in H1 2024. We managed to improve I mean, the situations in H1 2025. That's also reason why, I mean, despite, I mean, this lower level of revenue, we managed to maintain quite a good level of margin. It is in particular because on cyber services, we tend to focus on margin improvement as opposed to growth, and this is what happened. So we are pretty happy with, I mean, the directions in terms of improvements of margin for this cyber service business, even though we are still not yet where we want to be, but it is pretty positive. Nothing more to report on cyber in particular, no specific one-off sales or different type of mix. It's more, I mean, those two different businesses, product on one side, services on the other side, and services where today we streamline, we rationalize, we focus on more attractive market to improve the level of profitability.
On defense, if I follow up on defense, and good morning, Hervé. On one hand, you're right, the figures are the figures. Now, in this long-term business like defense, we are obliged to report on a quarterly basis, but it doesn't make sense. So year after year, we explain why Q1 is up or Q2 is down, but honestly, the right, we say, measurement is at least a yearly measurement. And typically, you said UK is down by 25%. Would we have taken or booked the big LMM contract in Q2 instead of a few days after? You would have said exactly the contrary. So you see how I would say meaningless, if you authorize me to say so, it is to look quarter after quarter at order intake. But okay, this is the rule of the game, so we do so. But I do insist that we need to always to take a bigger perspective when we look at OI for defense. Should I say the same d'ailleurs also for space or even avionics? Now, of course, we do confirm the global, I would say, guidance for order intake in 2025. Book-to-bill ratio will be greater than 1. And of course, defense will be a key contributor of this strong commercial performance. So it's more a qualitative answer I share with you, but clearly, defense will be a key contributor of this commercial performance. And we do expect a strong commercial performance again in 2025 after several years or many years in a row with such strong momentum. And this is due, again, in defense, to the geopolitical situation. So it's another way to step another step back and to look at the commercial momentum in defense and the one we observe at Thales. So hope it has reassured you and given you enough, I would say, color to be confident that defense is enjoying a strong defense momentum, and in particular for Thales.
Thanks. That's very clear. Thank you both.
Thank you. Next question is from the line of David Perry, JP Morgan. Please go ahead.
Yeah, hi, Patrice, Pascal. Hope you're well. I just want to dig into this plan to increase the defense spending from 50 billion to 64 billion in 2 years that Macron spoke about. I think it was on July the 14th in his speech. It's a huge number. It's had very little media coverage here in the UK or impact on the shares, which suggests to me people don't really believe it. So could you just explain to me here in the UK, what is now the legislative process to make this happen? What are the next steps? What are the obstacles or the things that will or make it happen or won't make it happen? And if it is passed into law, when is the money actually spent? Is there a time lag? Thank you.
Hello, David. Thank you for your question. It's a good question as well, of course. I think the answer is quite simple. It just requires a budget law. So it will be embedded, will be part of the budget law that France needs to operate, globally speaking. So there will be no dedicated law for defense. There is no intention and no need to change the LPM. It's just, I would say, it will be just translated in the budget law for 2026. Now everyone can speculate about will there be a law or not, a budget law or not in 2026. But clearly, the most likely scenario is that we will have one next year, and it will encompass this increase in terms of defense spending. I do observe as well that it's largely consensual in France. Largely, I'm not saying that it's unanimity, but it's largely consensual, and I'm not sure that I would say the debate in the House of Parliament will focus on this particular point. There are many other controversial topics to focus on than this one at the House of Parliament in France.
So is there? Thank you, sir. Is there a date, a specific date we should look out for, where, say, at least 2026? Because you're talking about kind of 14% a year growth. And I think most of us have been assuming 6 to 7% growth.
Yep.
So I'm just looking at when is this locked down and happens, and does the money get, if it's approved for 26, is the money spent in 26?
The orders are passed in 26. Now the cash flow plan are also specific contracts per contract. But this is mainly concerning, I would say, bookings, order intake, contracts. So what you will see normally in 2026 is a 3.5 billion euro additional contract passed to the defense industry.
Maybe, I mean, if Patrice allow, I mean, the only caveat is that, I mean, 3.5 is the overall increase in defense spending, covering both OpEx and acquisitions.
Absolutely, yes.
And at this point, it's still...
We don't have the split.
There's a split between the two. As you know, overall, in most countries, and it is also the case in France, acquisitions tend to represent something like 1/3 of the global defense spending. So you could assume that overall, out of the 3.5, let's consider that in terms of acquisitions, I mean, the additional growth on top of the existing LPM should be probably 1 billion euro, if at least if we follow this 1/3 type of ratio. But at this point, it hasn't been disclosed. So we need to be a bit more patient.
But there is no intention, or no one has said any time that typically the number of military people will be higher next year. There is no reason why the salary would go through the roof next year. So in terms of OpEx, there will be a portion for OpEx, but there will no CapEx should be the first, I would say, beneficiary of this increase.
Okay. All right. Well, I'll keep an eye on the news flow. Thanks for the comments.
Mm-hmm.
Thank you. Due to timing constraints, we'll take a final question. This is from Christophe Menard from Deutsche Bank. Please go ahead.
Yes, thank you very much for taking my questions. I had three. The first one is on strategy and outlook. You mentioned some of the joint ventures with Foxconn. You had one with Kongsberg. Can you give more details as well? And there's a broader question around joint ventures. I mean, we've seen some of your peers rushing, so to say, to do joint ventures to gain access to technology. Do you have the same approach, or do you have all the technologies in your portfolio to address future demand? That was question number one. Question number two is to get back on free cash flow in H1. I think, Pascal, you mentioned it's linked to inventory optimization. So am I right to think that it is structural? It's not just the prepayment of the Indian Rafale that is making that good performance? And the last question is on the 2028 guidance for defense. I mean, you said on the call we should be organic sales growth around, I mean, I understood 8-9 this year. We were at 13.3 last year. So the 6-7 that you described between 24 and 28, is it something that is probably a need, I mean, maybe updated or maybe revised as time goes by? Thank you very much.
Shall I start with the joint venture strategy? So what we contemplate... Bonjour, Christophe, sorry. I should have said so first. The joint venture that we contemplate to create with Foxconn, Radial, and maybe other partners, by the way. First, it's not done. It was taken as an illustration of how we do prepare the future. So take it as an example of, I would say, how do we care not only about short term, but also about mid to long term, I would say, future of the group. This is, I would say, super exciting, a bit technical, so I've tried to simplify it during my speech, but this is very promising. However, it has no impact on the short run in terms of financial or economics. Moving to Kongsberg, what we decide to do with Kongsberg is to, in fact, to merge our own forces in Norway, and we have had for decades nice defense budget, and which is very strong typically on crypto in Norway, with Kongsberg business in terms of software defense radio. By the way, in many cases, crypto and radio, it's I would say intertwined quite, I would say, significantly. So in terms of economics, it's a couple of hundred of people and in the range of 100 to 150 million euros, to give you an order of magnitude of what it represents. So it's a nice joint venture. It's not a big one, but it's a nice one, and it is a nice way to, I would say, grab a bit more of the Norwegian market share, leveraging Kongsberg, I would say, presence, which is honestly stronger than ours. Ours is significant, but clearly Kongsberg is one, if not the Norwegian defense champion over there. So it's a smart move. And the last aspect of your question was about technology. The fact that you have observed several joint ventures created by other companies aiming at sharing or addressing technologies. It's true that it's less our case, because as you said, by the way, I do think that although we are not perfect, but we have already a very, very wide and strong technology or technical portfolio. Where we do need some joint venture, it's more to address the market, more a go-to-market, I would say, approach, than sharing genuine technologies or co-developing things, unless the customer asks us to do so, which is another aspect. But yes, we do not feel, I would say, a strong need to partner to get access to technologies in different countries. Free cash flow, Pascal?
Yes. So, yes, Christophe, bonjour. So, this performance in H1, I commented, which was pretty strong and, as you have seen, significantly above H1 2024. I mentioned that the profile of our stocks was part of the explanation. And we need to understand that we are working pretty hard, I mean, to optimize overall the level of stocks at Thales. So we believe that there is opportunity on this matter. And what you have seen in H1 is a first step of overall better management of stocks. Behind that, hard work on things like a more effective sales and operation planning, but also, I mean, being the outcome of a progressive improvements overall on supply chain. By the way, it was quite interesting in this call that we didn't get any questions on supply chain. I mean, just a year ago, there were many questions on this matter. And it shows that we see the situations overall in supply chain improving, even though we're still not there yet, and there is still some roadblocks, but overall situations is progressively improving on this matter, which also offers opportunity probably to optimize our overall level of stocks. And all of that overall in an overall trajectory where we discuss about the need for us to invest more in terms of capital expenditure, while, I mean, preserving a pretty strong level of conversion ratio. So, taking into account this global picture, opportunity to optimize stocks, a better supply chain situations, the need to keep ramping up overall our production capabilities, All of that is basically what we do to keep reassuring you on our ability to keep delivering a strong level of cash flow. Your second question was more about organic sales, in particular on defense and adjusting, I guess it was probably upwards, our visions on the 6%-7% that we mentioned at the Capital Market Day in November. So to that, I would say, Christophe, you need to be a bit patient. By the way, it is very consistent to what we have said in the last 6 months. We said that all of that will take time. By the way, we explained that the first step was for the countries in which we operate, in which we sell, those countries to explain how quickly they will be able to raise their defense spending. Hence, the comments on the French defense spending. And yes, and the need, I mean, to have the statement from Mr. Macron to be translated into the 2026 finance law. All of that resulting in additional order intake that will drive more revenue and more EBIT. So let's take it step by step. You have seen that H1 was pretty strong. This led us to upgrade the overall guidance for the full year, in particular driven by defense. So all of that supporting a pretty positive view on the developments of our defense business in the next few years.
Thank you very much. Very clear.
Thank you. I will now pass back to the speakers for any closing remarks.
No closing remarks. Thank you very much for being with us this morning, and we will be pleased with Pascal to continue these discussions during our roadshow coming soon this week and early September. Thank you very much, and have a nice summer break for those who take vacations. Bye-bye.
Thank you very much. See you. Bye-bye.
Thank you. Ladies and gentlemen, if you didn't have a chance to ask your question on today's call, please do not hesitate to send your question to Thales Group Investor Relations at ir@thalesgroup.com, and we will get back to you as soon as possible. Thank you all for your participation. You may now disconnect.